As long as you keep your risk at that 1%, you're risking 1% per trade, you'll be all right. But as soon as you go above that 1% per trade, it's kind of inevitable that you blow up your account, because the likelihood of you losing like 10 trades in a row is extremely high. And if you're using like 5% per trade, 10% per trade, you imagine that's like a 50% drawdown or more, which that's extremely hard to come back, because you don't have to just make 50%, you have to make extras to come back from that.
Welcome everybody to another funded trader of TradethePool. Today is another funded trader. William is with me. How are you doing, buddy?
Hi, I'm doing good.
Good. That's great that you came to this interview. That's another special one. William passed the swing program of the super buying power, or the 12K buying power, basically. And we'll talk about that, understand his method and strategies. And we'll dive into that in a second. I'll share William's hub as well. But before we'll dive in, tell us a little bit about your background in trading, William.
So my background in trading, I'd always known about it, like on Instagram or whatever, like your typical Lamborghini day trader. But I never really got into it. I just didn't know anything about it, really. So when Bitcoin, like the big major bull market in 2020, 2021, that first happened, I learned about Bitcoin futures, and that was a disaster. I just 100x leverage. I didn't know what I was doing, just YOLO. So that was my perception of trading for a while. I'd fallen into this narrative that it's just luck, kind of. I didn't know any systems. I didn't know risk management. I didn't know any of that. So it wasn't until later on I'd heard about this book called How I Made $2 Million in the Stock Market by Nicholas Davas. And that it's in the book, he details like going from 0 to 100. Basically, he talks you through every step that he went through. And I kind of realized where I was in that book and where I needed to be if I wanted to do this, because it's a very attractive way of making money, right? So yeah, going from that, I got the system from him, or the foundations of a system. And then from there, I continued to kind of go through the bits and pieces with other traders. And then I developed a confidence from that. And then, and found TradethePool and gave it a go.
That's amazing, because many guys like you, especially at your age, starting from Instagram, right? Watching those videos of the Lamborghinis and decide this is the one for them. And interesting, do you have any background, like in the family, anyone that went through finance or?
No, none.
Okay, gotcha. And when you first started, did you know what you're going to do? Went all the way to the day trading concept, or did you try both of them, swing and day, and decided later on?
I quickly found out that day trading wasn't for me, simply because I'm not a very big fan of, I like to hold a position. When I get in a good position, I like to hold it for quite a while and just slowly take profits out over that position. So day trading, just not my character at all. I knew very early on that if I was to be a trader, it'd be swing trading.
Wow, that's amazing, especially at the beginning of your career, we'll call it, understanding that swing is better for me than day trading. That's a big plus for you. Amazing. So how did you find what will work for you? I mean, you tried many things, I'm guessing, but where did you find your spot?
So I'd looked everywhere, because I think the general notion was that when people have a good trading strategy, they keep it close to the chest. They don't reveal it, right? So, but I kind of went into the perception like, I don't think I'm smart enough to really there's some really advanced strategies out there which wouldn't be for me. So I got quite lucky. So I read the book. I found another trader who was another swing trader. And then I started reading more. And then I quickly realized they've all got different names for their strategies, but they're all basically doing the same thing, which is trading momentum stocks, looking for the best momentum stocks, looking for nice sideways consolidation, and then trading the breakouts of that. So high type flags, really. So yeah, that's when I was like, it was simple enough for me to grasp. So I felt confident in its execution. And then I started looking into win rates. So trading the strategy, you can expect like a 30% win rate. And that's like in the middle. Like that's a good win rate. The risk to reward strategy, you'll lose a lot, but when you do win, you win. And as long as you keep your risk at that 1%, you're risking 1% per trade, you'll be all right. But as soon as you go above that 1% per trade, it's kind of inevitable that you blow up your account, because the likelihood of you losing like 10 trades in a row is extremely high, like 90%. And if you're using like 5% per trade, 10% per trade, you imagine that's like a 50% drawdown or more, which that's extremely hard to come back, because you don't have to just make 50%, you have to make extra as well to come back from that. So risk management is, if you don't have risk management, trading high type flags just doesn't work at all.
100%. And I really like the fact that you said, you found that the breakouts were very simple to understand, right? And a lot of the guys that just starting to trade, they will go to a fancy holy grail type of strategy instead of really understanding that they need to find that simple one that you can actually relate to, understand it well, and then you can execute it and find those nuances that you need in order to understand which one is better than the other and such. So that's super important. And of course, the risk management that you touched on, it's crucial. Also technical, but also on the mental side, right? Because as you said, if you're losing in a row like 10 trades, getting back, even if you have a great strategy, getting back from that loss, it's kind of hard mentally. You will see a win and you will take your profit very fast compared to what you actually needs to do. Okay, I'm going to share your hub. For those of you not familiar, each trader will get his own hub where you can see, or she can see, the progress of the evaluation. You basically need to reach a certain amount of profit in order to pass the evaluation, and then you get funded, and any profit that you will make, we will split it. So this is all right. So this is William's hub, trading on the super buying power of our swing program. We also have day trade program. So with the swing program, you got $12,000 of buying power, comparing to $80,000 if you day trade in it. This is the goal that he needed to reach. Max loss in case he reaches that, the account is terminated. A daily pause, meaning it will stop for the day and you can come back later on. And this is the chart, a very nice one. You had very nice push to the upside. And as you mentioned, a lot of the times are basically you in a drawdown or a loss, and then you got the push for that trade that got it. So 34% success rate, 5.2. That's very nice. That's decent. And other than that, 76 trades. We only required 15. You made a whole lot, I gotta tell you, compared to to other swing traders that we have, funded traders. You are trading a lot, but that's totally fine if it works for you. Tell me a little bit about, let's take this nice trade on the BFLY. Let's talk a little bit about that. What you got? How did you enter, and what was the case here?
So for me, that was a picture perfect example of what I'm looking for. It showed up in my scans. You've got a strong move up. It's gone 100%, and then it's consolidated for 30 days, and it's formed this perfect triangle. And for me, that was like, yeah, game on. So I wait for the breakout. As soon as it breaks out, I set my stop loss for the low of the day, and then if it gets hit, no problem, I lose 1%. Which, as you can see in my chart, it's not a big loss. I take lots of 1% losses. So, but when it does hit, it hits. And BFLY was one of those examples that hit. Yeah, just picture perfect trade in my eyes.
So let me ask you about this strategy in general, but also here, how important is the volume during consolidation, or before that, or after that? Let's talk a little bit about that, because
you want declining volume. You want a big spike of volume during the price moves up, and then you want declining volume. Doesn't really matter how the price consolidates, as long as that volume is still higher than it was before the big move up, then you're okay. But you're just looking for the price to get tighter. Whether it gets really tight in like a triangle, a square, it doesn't matter. As long as the price is getting tight and you can put an objective breakout point. Objective breakout point, you buy in. Sometimes you can buy in early, but the strategy works way better if you wait for the breakout.
That's great. And one more thing that I'm guessing the guys that listening right now are asking themselves, breakouts comes also with fakeouts, right? How do you know when it's going to be a real breakout, and how do you know when it's a fake?
So I think general opinion would be like you're looking for volume in the breakout. But I think if you wait for volume to come up in the breakout, chances are you're not going to get a very good entry at all. So the honest answer is you don't. That's the whole idea behind the risk management. You've got no idea. You can have a picture perfect setup, but at the end of the day, you've got no idea, and you need to account that there's a 70% chance this will go wrong. So yeah.
That's a great answer, because I always say that as well. So we don't really know what will happen. We just need to trade what we know that in most cases will trade, or even if not, we have the risk management to back it up. So that's a great answer. Amazing, William. Let's finish here with just 2 questions that I have. Okay, one.
Okay.
How did you feel when you saw that you passed the evaluation?
Fantastic for me, because I'd never done an evaluation before. This was my first thing doing prop firms, and I'd always heard about like reading people's experiences on online, like Reddit or whatever, that people saying like, oh, it took me like 7 prop firms to finally pass or whatever. But no, extremely happy. It was a massive confidence boost to know that my research paid off, and I wasn't just like daydreaming, if you will, that I actually had something there, and I hope to continue that.
That's amazing. I mean, you actually did it. Like most guys, as you mentioned, they will need 2 or 3 attempts to pass the evaluation. You did it in your first attempt, so that's also incredible. And so I guess the last question is, what kind of tip or advice you can give for the traders that listening right now in order to pass the evaluation?
It kind of just goes based on what I said before, which is you can have the best system in the world, but no risk management. I'd suggest you look up like the likelihood, whatever your win rate is, of you losing like 10 trades in a row, and figuring out your drawdown from that based on your current risk management. Because in my eyes, from every single book I've read about traders, consistently it's about cutting your losses small. It's consistently about keeping that risk management small. Sure, you miss out on the big wins that do come, but when eventually that thing does happen where you lose 5, 8, 10, maybe even 12 or more trades in a row, you can be like in a 15, 18% drawdown, and you can come back from that. But when you get to that minus 50, minus 60% drawdown, it's like, not much you can do there.
100%. All righty, William. Thanks so much for the interview. Guys, come check us out at tradethepool.com. Go through the process, evaluate. If you reach the target, we split the profit, go to the funding phase. Again, thanks so much, William. Hopefully we'll do another interview once you get your payout. And that's it, guys. Good luck. Bye, William.
Nice. Bye-bye.